Welcome to today's market report.
US shares fell on Monday, having whipsawed between gains and losses as soaring oil prices that hit multi-year peaks stoked fears about rising prices and tighter monetary policy, lifting the dollar to a near three-year high against the yen. A rally in basic material and energy shares on higher oil prices initially lifted major US stock indices, but the gains faded as investors focused on the start of the US corporate earnings season next week. Some analysts anticipate businesses reporting slowing growth due to supply chain snags and rising prices. They warn that this could lead to a drop in US stocks. Whether the final chapter of the mid-cycle transition ends with a 10% or 20% correction in the S&P 500 will be determined by how much earning growth decelerates or has to outright decline, Morgan Stanley analysts said. We are gaining confidence in a sharper deceleration, but the timing is more uncertain. The Dow Jones lost 0.72%, the S&P 500 fell 0.69%, and the Nasdaq dropped 0.64%. The Pan-European Stock 600 index was little changed, edging up just 0.05%, while MSCI's gauge of stocks across the globe shed 0.33%. Heading to Tuesday, the mood in Asia could also be hit by news that Chinese property developer Evergrande may miss its third round of bond payments in as many weeks, and rivals Modern Land and the CINIC became the latest scrambling to delay deadlines. Oil prices, which had jumped on Monday on rebounding demand and cutbacks in supply, gave up some of their early gains but still ended the session higher. Brent crude rose 1.5% to $83.65 per barrel after climbing as high as $84.6 per barrel, its highest since October 2018. US WTI crude also added 1.5% to finish at $80.52 per barrel after touching its highest since late 2014 at $82.18 per barrel. Analysts are divided over whether energy supplies are tight enough to warrant oil testing $100 per barrel, but most seemed to agree prices are likely to stay elevated in the short term. That helped basic materials and energy stocks in the S&P 500. They jumped 0.96% and 0.88% respectively, Refinitiv data showed, outperforming the broader market. Rising prices are also filling bets that major central banks will tighten monetary policy sooner rather than later, lifting the dollar to a near three-year peak against the Japanese yen. In the US, investors expect the Federal Reserve to begin tightening policy by announcing a tapering of its massive bond buying next month. This had hobbled the yen, which is typically sensitive to interest rate differentials. The yen weakened 1.02% against the greenback at 113.38, and the dollar index rose 0.23%. A stronger dollar pushed the euro down 0.14% to 1.1551. The euro-dollar pair advanced mainly on the back of the British pound. On the weekend, some Bank of England's members expressed concerns about inflation and the possibility of hiking rates as it threatens to be stickier than expected. The Eurozone economic docket will feature the zoo survey of economic sentiment and current situation on Tuesday. ECB's chief economist Philip Lane and ECB's member Frank Alderson will hit the wires. Across the pond, the JOLTS job openings for August, expected at 10.925 million, could offer some fresh impetus for Eurodollar traders. Eurodollar is trading well below the daily moving average, pushing towards last Friday's lows. Momentum indicator like the relative strength index is at 32, exited from oversold levels, suggesting the downward bias remains. A break below 115.40 could open the door for 2021 low at 115.28. Sterling dollar has been pressured, giving back its weekend BOE headline gains made in the opening of the week. The pair is trading at the lows of the day near 135.84 and has fallen from high of 136.73. There are a number of negative fundamentals at play, from Brexit woes to the energy crisis, which amounts to a weaker economic backdrop in the United Kingdom. In recent trade, headlines have circulated that David Frost, the Brexit minister, has been accused by the EU of trying to undermine serious attempts to solve the problem of the Northern Ireland Portugal, the Irish Foreign Minister has said.
This is today's market news. Thanks for listening. We'll see you next time.